Hey, welcome back. I'm going to be discussing and describing the three layers within the Bitcoin network because we're hearing an awful lot about Bitcoin as there are more companies, even governments and private investors incorporating Bitcoin into their own treasury. So I thought just to dedicate a few moments describing in a little bit more detail why it's such a fascinating and a growing asset to have in your portfolio. So let's jump straight into it. Okay, let's run through each one of these layers in turn. So Layer 1 is really the base layer of Bitcoin network. As with most blockchains, they always are structured and architected by layers. So the Bitcoin network base layer is fundamentally used for settlement and transactions. Layer 2 are software protocols that are built on top of Layer 1, mainly to improve certain functionality that are shortfalls in Layer 1. We'll discuss what those are in the next slide. And then finally, Layer 3, these are the brand new suite of decentralized applications. So these are going to be what the end user is going to be transacting on a day-to-day basis on the Bitcoin network. So let's jump into what each of these layers represent. So the base layer, Layer 1 in Bitcoin, as I said, is mainly used for transacting and settlement purposes. It includes a public ledger of Bitcoin transactions. So these are the transactions that are kept resident in that ledger. It can't be changed. It's immutable. It's trustworthy. It cannot be tampered with. So all of the attributes of a blockchain applies to this same public ledger in the Bitcoin network. It involves network nodes that are used for verifying and validating transactions under this proof of work consensus mechanism, for committing new blocks, verifying new blocks before they actually get committed onto the public ledger. It's been launched in 2009, so it's been around for 15 years. It's quite new, but it's growing. But what are the issues of Layer 1? Well, firstly, it's very slow speed. It takes up to 10 minutes for a brand new block that contains the new Bitcoin transactions to take effect on the public ledger. So it's quite slow, and it has high transaction costs. So these are the main two issues on the Bitcoin Layer 1. Layer 2, now these are what I call the software protocols. So these are the software components that make some certain improvements on the Bitcoin Layer 1. So it addresses the issues of the slow speed, so it replaces that with much faster processing speed and lower transaction costs. And achieves this efficiencies by, in effect, processing transactions off the chain, so off the Layer 1. It then transfers back to Layer 1 for final settlement on the base Layer 1 chain. So what are the examples of these Layer 2 protocols that sit on Bitcoin? Well, these are noted here. You've got the Lightning Network, the Liquid Network, and the Omni Layer. So these are three most famous software protocols that are actually being worked at the moment. And some of them have been implemented, has been around a while, and we will go each one in turn. Before I do, these three software protocols aren't what the end user are going to be seeing. They're going to be seamless. As I said, they're mainly there to address the Layer 1 inefficiencies, right? So let's move on protocol examples. So you got the Lightning Network, which is really used for fast, smaller value, what we call micropayments. It also has fast transaction confirmation. So rather than 10 minutes, which is happening on the Layer 1, they occur in a matter of seconds, up to a minute. It also has very low transaction fee, which is very different from Layer 1. It's really costly and expensive in comparison. And it handles and supports micropayments, even down to the nth decimal place of a Bitcoin. So you can see the possibilities under this Lightning Network for mainly e-commerce, if you like, buying a cheap book or a small value shopping, grocery shopping online via the Lightning Network. That will be a perfect vehicle for that. Another example of a Layer 2 is what we call Liquid Network. This Liquid Network is a side chain to begin with, right? And it's mainly used for traders and crypto exchanges, so for swapping tokens from one token to another. It also, as with Lightning Network, it supports fast processing and settlement of Bitcoin and US Tether transactions. It's also governed by a federation of 57 crypto platforms as having greater momentum. As with the Lightning, it also has confirmation speed up to around from anywhere from a few seconds to a minute, and also has very low transaction fees, a fraction of a cent. So the Liquid network is an alternative Lightning network. They pretty much act the same thing, but in addition to retail like small value transactions that happen faster and cheaper, it's mainly used for traders and crypto exchanges. And then finally, Omni Layer. It's actually, you can think of it as a place for creating and selling new tokens or custom tokens, or what we call here crypto coins and assets on the Omni Layer. It's one of the oldest layer 2 projects out there. It's known as Mastercoin, and it currently has over 800 custom coins and tokens, and it facilitates trading among asset issuers and with BTC and US Tether. So think of Omni Layer as a place, as I said, for creating those new NFTs and custom tokens on the Bitcoin network. So it's just another use case on top of the part of the Bitcoin network itself. And then finally brings us to layer 3. Now, for me personally, in comparison with the other 2 layers underneath, layer 3 is where we're going to see the greatest opportunity, because this is the place where you're going to have a lot of apps, but they call it decentralized apps, but they're mostly apps that the end user are going to be able to see, touch and download onto their smartphones, for example, or onto their laptops, and to be able to transact through it on a day-to-day basis. It's going to be much more intuitive, and it's going to be more fluid. There's going to be an awful lot of applications at this layer 3, precisely because it's where the end user is mainly going to interface and transact their day-to-day transactions through the Bitcoin network at this layer 3. So it's a tremendous opportunity. I mean, one of the examples I've got noted here called Cake DeFi is an example of what they call a Bitcoin fork. But this, what really means is it's just a DeFi chain. It's for decentralized finance transactions through this layer 3 application or DApp. So for me, layer 3 is where we're going to see the greatest amount of dApps being created. And as a subsequence of that, a lot of companies are being sprouted. So they're being created out there to launch these apps. And they're going to be like, if you think of a smartphone, download the apps, and the user is going to be freely be able to install them on the smartphones to play around with and transact with on a daily basis. So the conclusion of this episode really is, as a reminder, layer 1 was meant to be served as a base layer, a core Bitcoin network layer for slow speed, high value premium transactions up to 10 minutes. Layer 2 are like the software protocols for improving the functionality on layer 1, which is slower and more expensive. So you have Lightning Network, Liquid Network, Omni Layer. They all share pretty much the same attributes, in that is faster to transact, much faster processing speed, and lower transaction fees in comparison. And then finally, layer 3, this is where you're going to see a lot more growth in comparison to the other 2 layers, a lot more dApps being created, a lot of software companies being sprouted to create those dApps for the end user to transact with on a daily basis on the Bitcoin network. And there is some debate about the requirement, or if layer 3 is needed for Bitcoin in order to bring Bitcoin to the masses, to the mainstream, to the end users and to day. I think layer 3 has its purpose, right? Precisely because it's the only place where users are going to be able to transact and use those dApps for their purposes on a day-to-day basis. So layer 3 is going to be there, and for me personally, it's where there's going to be the greatest growth of new applications for the end users. So, and that's it for today's episode. If you have enjoyed it, please hit the like button of this video, and if you haven't done so already, please subscribe to this channel, because this is where I regularly post some high quality videos that could be of interest to you investors out there. So until next time.